All right, guys. So real quick. So what I'm talking about right now is in trading. You trading, this is a business, and you want to treat trading as a business. You want to treat what it is you do not as just a hobby. So the thing is with trading, it's a numbers game. Okay, it's a numbers. It's numbers and risk to reward. There's numbers, and just because we're here, we're growing money. So what I want you guys to focus on as we become traders, and I am Mastery Academy, and we're developing ourselves as pro traders. Okay, I'm talking to you as a pro trader, not as somebody who flippantly trade, just messing around as a hobby. For those of you who literally are believing for $50,000 a month withdrawals, for those of you who have six-figure a month profits that you're believing for in trading, this is what's going to get you there. And I've learned this from some of our top educators in I Am Mastery Academy. So this website is a tool that I use. So let's say you have an account. I'm just going to say $1,000. You know what? I'm going to make this even more realistic because some people don't quite have $1,000. They have maybe $250 in an account. Okay. And you're looking at a trade and you're looking at USD CAD. Now, keep in mind, what you want to do with FX books, you want to make sure that you pick the pair that you're looking at trading. Now, I'm going to stick to USD CAD because I'm currently in a USD CAD trade right now. Okay, so let's say you have $250 in your account. Now, what you need to decide is what percentage of your account that you're going to risk. Now, you always decide your risk percentage by not how much money you want to make. You decide your risk ratio based on the maximum amount that you're willing to lose. Do y'all hear me? Okay, again, you decide your risk because a lot of people choose a lot size based on how much money they want to make. They're like, oh man, I want to make such and such. Let me throw in a standard on that thing. Man, I want to make such and such. Let me throw $5 a pick on that thing. No, you pick your risk ratio percentage based on the maximum amount that you're willing to lose, because that's the only thing you can guarantee in a trade. You can never guarantee what you're going to make because the market can only go, the market may exceed what you're expecting, but however, you don't know. You don't know if it's going to quite make it to your take profit zone. You don't know if it's going to quite make it to an area that you want to take profit in. You may just settle and close the trade early, but you take what you take the profit. But what you can guarantee is the maximum amount that you will lose. And the way you do that, you determine based on the risk to reward, risk percentage. Now, I generally like to stick in the 2% area. Now, I used to trade 3%. You're thinking like, man, 3%, for those of you who might trade 3%. For me personally, I'm not, I've tapered down a little bit and I've not become as aggressive because literally 3%, even though it's just 1% more than 2%, it just takes a few trades to lose. And you've put yourself in a position, literally at 3%, you lose 3 to 4 trades, that's 10% of your account. But at 2%, you literally need to lose 5 trades to hit your account 10%. So now, and I'm going to go a little bit further in what some of the things that I do once I decide. So now, what you want to then put down here, you want to put your stop loss pip count. You want to measure the stop loss that you're willing, based on either what you're willing to lose or based on the zone that the market may go to, that if it goes to the zone, hey, I'm willing to take a stop. So you want to measure that stop loss. So let me show you guys this. This is a trade that I'm actually in right now that I got in early this morning, okay? And this trade is USD CAD. And here's my entry area right here. Now, here's what I made sure I understood is this. Now, I could put it right here, but I felt like it could be a bit tight because I'm trading. Literally, I actually took this trade on the 4-hour time frame, okay? And so I'm putting it above the highs. So if you see, like, the market's moving against me right now, I'm in a little bit of drawdown. But from where it's at right here, this trade is literally 35 pips. Okay. Maybe, yeah, I measured 35 pips. Okay. Now, my expected TP, my target that I'm going for is 184. And I'm going to get in that 185 pips. And I'm going to get to that in a minute. But I've decided now, this is where my stop loss is going to be. So I'm going to come to my FX books. Are y'all following me? Y'all good? Y'all good with this? Let me know if y'all get some value out of this. I know I've still got some more to go, but drop a 222 if y'all getting some value out of this. So 35 pips right there. That's what I've decided. Boom. Okay. USD CAD. Now, once I put that in there, then I click calculate and it tells me my lot size. And I don't budge because I've decided, I've counted the cost. This is what I'm willing to lose, 2%. So in this case, 2% of 250 is $5. So it tells you up front, if you lose this trade, what you're gonna lose. In this case, $5. Okay, now give or take, it may be a little bit more because of the fees that your broker charges. So it could be $5.15, $5.20. It could be a little bit more, but give or take, you're in the $5 range. Now, the cool thing I like about my FX books is this. You can also do percentile. So you can do not just 2% even, but you can do 2.5%. Let's say you don't want to quite go to 3%, but you want to do 2.5, then it adjusts the lot size. So in this case, like, man, I want to do, so what now I'm going to do is I enter the trade as I'm doing a market execution, or whether it be a sell limit in this case or market execution, I am now using this lot size as my lot size to enter. I've counted my costs. I've literally said, boom, this, okay, I'm good with that. Now, the next thing I want to do, this is a big change that I've done in my own personal trading, okay? Now, you want to calculate your risk to reward. I may be getting a little bit ahead of myself here, but I'm gonna just kind of go with where my head is leading. You want to calculate your risk to reward. Now, you have trades that are 1-to-1 risk to reward, meaning in this case, a trade that you're risking 35 pips, okay? Let's say right here, you're risking, this will be your entry in this zone, 35 pips, okay? You're 1-to-1, meaning your TP is just that, 35 pips, okay? Some of you are okay with that. There's nothing wrong with that. Based on your strategy, based on what you do, okay? Based on what you do, yes, Wendy, I'm definitely gonna be going over some scanners. And I'm gonna speed up a little bit. So based on what you do, you decide your risk to reward. Me personally, I no longer get in trades that are not a 1-to-3 risk to reward. Like, I don't entertain it anymore. 1-to-1, like, I'm not doing that. Like, because now I've put myself in a position where I'm risking exactly what I can gain, which is cool. And there's nothing wrong with that. Many of us, that's how we've been taught based on the educator we follow. But now I treat this more as a business. I look at this a little bit differently. I know that there are different types of trades. There are quality trades. There are trades that are high quality trades, and there are trades that are low quality trades. Right now in the chat, let me know if you had the choice and you could identify them. Some of us are new and don't yet quite know how to identify them. But if you could identify a trade, would you choose a quality trade over a lesser quality trade? You would choose a quality trade, I'm assuming, right? I know you will, because y'all are smart on this call. So I choose a trade based on a risk to reward that is at least 1-to-3. I measure where the possible zone, possible TB, possible target. In this case, as you can see in this trade now, and I'm not talking about TP3. I'm talking about my TP1 has to be minimum 3 times of what I'm risking. Okay, so in this case, here's the first target zone. First target in this case would be 100 and actually the first target is actually right here, 130 pips. Okay, so y'all know that I'm risking 35 pips. So those of you know, let's say for me to take this trade, I have to at least make 105 pips. So even if I took it right here, I'm at 111 pips, 110, let's just say 110 pips. Okay, even if it came right here and I decided to close it out hey, I could close it out. But here's where I actually think the market's going to go at least. I think the market's going to go down here. So look at this trade right here. This is a 35 risk trade, but TP could potentially be 180. So right now, this trade could potentially yield me a 1-to-6 risk to reward. I took a trade this morning. Steve specifically talked about a trade that I took this morning, which was GJ. I got in GJ this last night, early. When I say this morning, I'm talking about early this morning. So I got in GJ, which I felt like this was a definite bullish move. I saw the bullish move, but then I saw an institutional candle where the banks basically was trying to stop out and retest and knock out and pick up liquidation. So I entered the market, took this trade around this zone, and here's how I entered this trade. Entered this trade in this area right here. I had a little bit of drawdown. I actually honestly got in a little bit early than I should have. And here's where the market actually went. But my TP was literally set at about, my TP was right here. Like it literally came close to my TP. And I was willing to like, okay, you know what? If it hits it, it hits it. But it didn't. It literally came to this point, and after it closed to this right here, and it just shot up. Now, I took, my TP was 150 pips. But here's the thing. I had some things going on this afternoon, and as I was transitioning, I was still in this trade. Steve will tell you, and I just couldn't focus. And I looked, and I was not necessarily stressing out, but I didn't want to be looking at the trade, and I couldn't no longer focus on the trade and focus on what it was doing, because I was planning on taking another position if it pulled back. But I literally wanted to put this trade behind me. But here's the reason why I closed the trade. I closed the trade because at the point that I was thinking this, I was already at 120 pips. Okay, 120 pips. I risked 30. I'm at 120. Guess what? That's 4 times what I risked. You know what? Yeah, my TP's up here. But you know what? I said, you know what? I'm just going to close this trade. So now, let me transition a little bit as we're going to wrap up this call. Wendy asked if I'm going to go over scanners. Yes, I'm going to go over scanners. And I'm going to go over scanners that literally hand me. These scanners are handing us trades that are risk to reward, 1 to 2 minimum. But I'm going to say on a regular, I'm seeing 1 to 3, 1 to 4, 1 to 5. Let me show you a trade right now, potential trade off of steady. Hey, drop a 222 in the chat right now if you're down with steady. If steady is that app that you rock with in IM Mastery Academy. This is one of my favorite apps. Okay, one of my favorite softwares. John Darley, Justin Saney. So here's the optimal entry on this trade. Now check this out. So let's say if I took a trade in this zone right here, but let's just say there was in this optimal entry zone. Now, look at the stop loss. Stop loss is 30 pips. Yeah, steady looking nice, okay? That's smart money. But look, TP 30 pips, TP1 is 60 pips. Now, here's the thing. This trade right here, for me, it's a 1 to 2, okay? So TP1 is 60 pips. I'm risking 30. Now, based on my personal rules, I'm looking for 1 to 3 risk to rewards. Now, this would need to be a bit up here for me to say, hey, I'm taking this. Now, granted, if I do my own, doesn't necessarily mean I can't do my own analysis and say, you know what? I believe this is going to blow past TP1. If I'm that confident, then I may take this trade. But if I'm like, I don't know, yeah, it may just come up here and come back down, or I may have to take TP1, then, you know, I just kind of do my own analysis, see how I feel about that. Let me show you this specific trade. Matter of fact, the USD CAD trade that I'm in right now is based off of steady signal. Okay, here was the actual entry that John Donnelly called out. On this, actually, it was right here. This was the entry, and the stop loss is 35 pips, okay? Now, this trade, as I showed you, okay? Boom. Now, you still have a chance to get in this trade, even though it was called late last night, early this morning. It pulled back some. It was in profit, pulled back. It's on a 4 hour, so you got to give it time, okay? Because look, it literally, the market extended from way over here, so it's not going to rush back down here. It's like an 18-wheeler truck. It doesn't just turn on a dime. It takes its time. It's a big monster truck. It takes its time to reverse and retrace back. Now, nonetheless, look at TP1, 35 pips, risking 35 pips. TP1 is 90 pips. Now, some would say, man, but 3 times that is 105 pips. Well, give or take, I'm not going to be like super strict and be like, oh, you know, I'm 10 pips short from my 1 to 3 risk to reward. Nah, I may take this trade. Obviously, as you can see, I'm in this trade. But as a matter of fact, I feel like it's going to go much deeper because as you can see, I did my own personal analysis before John Dollery called that trade. I was already eyeing USD CAD. I was in USD CAD last week and got stopped out, but I knew where the target zones were. So the market extended further, but now it's getting ready to drop back, I believe. So which is why I got in this trade. Now here's another software I want to touch on and I'm going to wrap up. This is like my new favorite software. And you guys who were on the call last week, I touched on this a bit, is the bounce back. Okay, now you're probably thinking, really? Bounce back got that high, that bomb risk to reward? Well, you got to know the sauce, and I'm giving y'all right now the sauce. It's not just bounce back, but when you get into bounce back, you got to come into strategies and go into sniper strategies. And right here on sniper strategy, woo, this is a new trade. I didn't even see this earlier. I'm analyzing this trade with y'all right now. Entry area. Bounce back. I mean, this is a fresh trade, guys. Like fresh. So now this trade on the 1 hour, they analyzed it. Look at this. Market, they're expecting market to pull back into the zone. This is the entry area. So you want to look for price action. You don't want to just get in it raw because it could shoot up here. It could, matter of fact, even so you want to see the market slow down and look at price action and look for your entry opportunity. So let's say we got in right here. And the market, what are we risking, first of all? Maximum risk on this trade. Sheesh, 26 pips. Yo, okay, look at this. 26 pips, risk, maximum risk. And then look at the TP, y'all. I'm risking 26 pips. Come on, man. For 98 pip TP1. I'm on this trade all day. I'm setting my alerts on my trading view and I count my costs. I go in here. So I'm going to do this with y'all. Okay. Bounce back. So here's what I'm going to do. Let's say if I entered it here, I'm not going to base my stop loss based on here because I may enter the trade right here. So on this case, you want to do, who said Ben sleep? Ben sleeping. Yeah. Yo, some people have been sleeping on bounce back BBB sniper, the bounce back sniper. So let's just say I entered from the bottom of that zone. Okay. So that'll be 35 pips. Okay. Now my hope is that the market comes deeper into here. Okay. 35 pips and TP is, let's just say 90 pips. Okay. 90 pips TP. Okay. Almost 3. It's not quite all the way 3, it's just slightly short of 3. Okay. So what we're going to do is we're going to come here, Euro GBP. And I'm sorry, actually right here, Euro GBP. Let's say, you're looking at this trade, Euro GBP, $250 account, and you're like, yo, I'm gonna, okay, you know what? I'm gonna be a little bit bold. Greg only trading 2%, but I want that 2.5%. 35 pip stop loss. And then let's look for Euro GBP because you want to trade, you want to put the specific pair because not every pair is the same value, guys. Okay. The lot size changes per pair because every pair has a different currency tied to it. So in this case, calculate. Okay. And it says 0.1. Let's say you're like, man, I want to risk a little bit more in this trade. Okay, cool. You say, okay, let me go in there and do 3. I'm going to do 3%. Okay. But I'd like to stay within 2, to be honest with you, because I have a ratio, and I'm going to tell you why I stay within 2. Okay. So it's still quite at 1, but you can, if you want to round it up, well, let me just round it up to 2. You can do that. So when you enter the trade, you'll know maximum you're losing is 750 if it hits the stop loss. Now, the trade was 3 times that. So if you're winning in this trade, TP1, minimum, if it hits your TP, you know you're making somewhere around $20, $21, $22 on the trade based on your stop loss, okay, based on what you know where the TP is. But again, you're not calculating based on the TP. You're counting the cost based on your stop loss. Now, here's why I do 2%. I do 2% because it takes, if I'm looking for trades that are 1 to 3 risk to reward ratio, okay, I win this trade. I win a trade at 3 times what I was risking. I need to lose 3 trades to erase my 1 win. Y'all get that? This is why I nitpick the trades that I get into. Some of us, like you, if you're like me, when you first started trading, your account would do this. You're up, you're down. Your count is up, your count is down. Your count is up, your count is down. You're like, man, I could never break this mark of 500. I could never break this mark of 600. Man, it's, you get to 500, you're about to pass it, you pass 500, boom, and your account goes back down to like 450 again. You're like, man, well, you want to count the cost, first of all. And secondly, you want to rate the trades. You want to look at the trade and say, is this a trade I should be getting into? Is this a quality trade? So for me, it's 1 to 3. So if I win, I know it's going to take 3 losses for me to erase that win. Now, if I win twice, like today, the GJ trade that I mentioned, that was a 6% win on that trade. So if the UCAD trade that I'm in right now, my account after that will be up 12%. It's 12% from after. So now I'm going to need to lose 6 times to erase what I've just done. So if all this makes sense, you got some value from that. I don't want to extend this. I could probably say a little bit more, but I think that's enough. But guys, I want to encourage you, plug in to the Go Live sessions. Plug into these educators. Watch, like if you're going to follow steady, make sure you watch John Dollery. He was on tonight. Watch his recording. If you're going to follow steady, watch Justin Saney's Starboy session. If you're going to get on this bounce back sniper, watch the educators that teach in accordance to those products, okay? And you'll understand a little bit more based on what I'm talking about and why I'm saying what I'm saying. Now, for those of you, this is not to change many of you who like to take one-on-one trades. There's nothing wrong with that. You just have to count the cost and you run it like a business, because there are plenty of traders winning big, taking 1-to-1 risk to reward trades. Okay, it doesn't mean you're not going to win, or traders who do 1-to-2, but you just have to count the cost, and then you have to qualify these trades, because some of you are willing to take 1-to-1, but there are trades that you're getting into where you're risking 1, but your win percentage, your win possibility is half. Like you're risking 30 pips to win 15 pips. Come on. I don't know. If you're winning on that, then keep doing it. But I'm just saying, there's just trades. Not all trades are created equal. That's it for tonight. I'm going to pass it back to my man, Steve. If you got some value from that, drop some 777s in the chat. Steve, I'm throwing it back to you, my man. Appreciate you having me on this call.
Let's go, let's go, let's go. Thank you, Greg, for the massive amount of value. And we appreciate you, brother.